What is going on, y'all? Back with some analysis. Had to take a couple days off, more than a couple days, but definitely a few days off. Went to vacation with my family, my girlfriend, so it's nice to spend some time away, but kind of always get my mind on the charts. Kind of like, definitely was still out there working, getting stuff done. I need to get done to get better, but just didn't really have the time or opportunity with the Wi-Fi situation to do like analysis and post and everything like that. Um, so that was a big lesson in like, what it really means to trade and travel and being like, you need good Wi-Fi. You need to make sure that you have good Wi-Fi. But, that's a different discussion for a different day. We're just going to get back into this analysis. We're going to do it on EURUSD. And we're going to start as we always start on the weekly time frame. On the weekly time frame, we are seeing still this expanding, extending, descending channel with 2 touches at the top and 1, 2, 3 touches at the bottom, right? And then we have the move off of the bottom, but before that, we can also see these 2 significant touches. It actually becomes 3. You can see that this descending pattern within this descending pattern, more of a daily descending pattern, completed, well, not completed, but had a 3rd touch of the top of the trend line, right? And now we're getting a rejection off that 3rd touch, but we could also be pushing higher. One, because the market can do whatever it wants, and 2, just to add to that confluence a little bit, the higher time frame momentum is pointing to the upside with the weekly descending channel being in effect, right? Because with the weekly descending channel, our first prediction, or one of our predictions, is this is a possibility right here, going up to this 180, about that level 180.60s to complete the 90% rule of this pattern. We could also see, as another possibility, a 3rd touch of the top of the daily descending trend line before price wants to react differently. If price wants to react differently, if price even wants to get there, that's a prediction. And then we could also see price break out of this smaller descending channel and push more to the 11570s, 11570s, sorry, 11570s. Can't speak right now, kind of tired. Literally just got off the plane like an hour or so ago, but whatever. Getting back to the analysis, we're going to go down to the daily as we always do. Looking at the daily here. Sorry, I was taking a sip of water. Looking at the daily here, we can see that descending within the descending a little bit clearer. We can neaten this trend line just up to the wick just to keep everything consistent. So that's how I do it. Put it to the wick. So you gotta do it like that every time. So again, see this pattern, see this descending within the descending, and we will also see for the first time on the daily a little bit clearer this pattern right here. So you can see from this pattern, although we're literally going to the wick, we can neaten it up like that and make it more like this, go in the most recent 2 touches, and it becomes more parallel to this trend line, bottom trend line, which is good too, which is often what you will see, or from my trend lines. It's not exact all the time, but one rule that I do have that is exact all the time about my trend lines is it will go to the most recent 2 touches and the wicks of those most recent 2 touches. And oftentimes what I found is it will create more parallel patterns, more parallel trend lines. Obviously, this is a big exception, being this more expanding pattern, not really parallel with these weekly lines. But again, going back to this, we can see this more ascending pattern, and we can see how price moved off of the 3rd touch of the weekly and daily descending patterns right here. You can see it moved off impulsively and then became very corrective, right? We are getting impulses within it, but 80-20 rule, most of this is a correction. See impulse, correction, impulse, correction, impulse, correction for sure, impulse, impulse, correction, impulse, correction, impulse, correction, impulse, got another impulse. And now this is shaping up to be looking like a correction. Price is still moving right now. It's one of the few times where I'm going to be doing analysis, like in the middle of the U.S. trading day, which is when I'm usually in the markets because I'm, from the U.S. But I usually do my analysis in the morning before the U.S. session starts. But again, just got off the plane, about a 16-hour flight, so I didn't really have the time to do analysis this morning. But getting back to it again, we can see within this ascending channel, we can see one, same bottom right here, two, and then again, one, two, most recent touches, right? And, with that, that means that gives a few possibilities. We could see price push lower if it wants to the 10880s, making more of a double bottom before pushing higher if that's what price wants to do, or we could see price push all the way down to another touch of this trend line before pushing higher if that's what price wants to do. So ultimately with the ascending channel, we can see a few things, right? But just going down to the 4-hour just to see it a little bit better and, get a better sense of what price is doing right now and what might be on the cards. And if there are any possible opportunities shaping up on the 4-hour, we can see more of this. If you want to put this trend line on, right? And this as well. So ultimately we got that push higher in this kind of ascending pattern up to another touch of this pattern before we got the break lower, and also another touch, a third touch of the daily descending pattern. And again, we got that in the form of this rising ascending pattern and then this smaller ascending pattern within it, which is good area. It's also where I took a trade from. I took a trade from this area, and I will put it on to show you how I took the trade, why I took the trade. Yeah. So ultimately, we got more of that pattern. And then the top being this as well. Let me actually neaten this up. More of this. All right, this is what I was looking at the time that I took the trade. And ultimately, on the 1-hour, when we broke lower and got more of this, you got this pattern. I placed an entry right below here. Ultimately, my entry could have been a little bit better, but this would, to me, definitely fit my plan, and was just kind of more of an uglier setup for my plan. Generally, what I like to see, if I just take it back for a second, generally what I like to see from these reduced risk entries, the first impulse off of this pattern, so we could see we get, the bigger ascending pattern, the smaller ascending pattern within it, coming in line with the third touch of the daily descending and another touch of the bigger ascending. Generally what I like to see after that first impulse, which is what we got here, is a bit of a tighter correction like this, right? But ultimately we did get that, but it just wasn't like the way that it always looks. And that's kind of something that I have to get more okay with and be more okay with in the markets for sure, just because it's like the markets aren't going to be picture perfect. And I have to know that if it fits my plan, it's a valid setup. It's a good setup. If it fits my plan, if it's in a good area that also fits my plan, and I forecasted the move, that's something that I got to be more okay with taking, because I got to give my edges the ability to play out, the probabilities, the ability to play out, right? And the sample size and opportunity to play out. So, ultimately, when we just move it along, got that right here, because right here, 1, 2, 3, 4, 5, 6, 6 candles is what's in my plan. 6-hour correction after the first impulse out of a high value or valid area. First 6-hour correction, that's what's in my plan. It was a 6-hour correction, parallel trend lines, entered here, had about a 26 pip stop just above the tight correct, just above the first impulse. So if price wants to tell me I'm wrong, it does it immediately and lets me know that it's time to possibly flip my bias. Ultimately, got entered in, right? And kind of hovered along this trend line, which is fine, before we got a bigger drop, and then we dropped lower. And this was the part where I was glad I was traveling. This all happened while I wasn't able to pay attention to the charts because of traveling. And I'm glad it did, because honestly, I think my psychology would have had me freaking out after seeing this big candle right here. But that's just a lesson to me that I gotta like let price play out. And on top of that, this was a setup where I had forecasted with my management to kind of let price breathe a little bit just because of the area that I was in. And basically, I was rewarded with that. So we ultimately got this, and we got a tighter correction. At this point, I was at 1% locked in. So that would have been right here, especially after this strong retracement candle. 1% locked in, which would have been like right about there. We saw this, and we ultimately saw a drop, which is when, as per my management already set up before the trade anyway, I knew once it got past what's a Baroka structural area after locking in 1%. So, after it broke this, I was willing to get way tighter with my management, way more aggressive with it, just because this was more of a setup that where I could see that the higher time frame momentum was pointing to the upside, and I wasn't naive to the strong impulse move up, and I knew that ultimately the price higher time frame momentum could turn around at any point, make the market flip its bias, everything like that, and ultimately the market can do whatever it wants, but it was more having to do with the fact that the higher time frame momentum was pointing to the upside with the two descending patterns. I'm just going to delete these trend lines just so it's a little bit cleaner on the charts. And so at this point, I was just gonna let price continue to play out. And again, this is one of those ones where I wasn't able to be at the charts, but had I been able to be at the charts, I would have saved myself like, sheesh, I don't know, maybe like, 7 extra pips per my management rules. So it's not really one that I'm really freaking out about. Price kind of just retraced quickly in the first place. And that's kind of why I wanted to get aggressive with my management in the first place. And I kind of, again, got rewarded for that, being that, price ultimately retraced sharply, took me out for 2%, about 2%, which I'm very happy with to start out the year. Any profit is good profit in my eyes. Something I'm trying to teach myself more, especially with watching traders like Austin Silver and his method of consistent pips, right? There are days when he literally gets 5-6 pips, and that's a good day for him because it's all about, your lot size. That's a different story for a different day. So that was kind of a trade that I took, a quick trade recap inside of analysis. And now we're going to be looking at what price is doing now. So if we go to the most recent significant 2 touches, right? Significant touch. And then the main most recent 2 significant touches are right here, as we got this rejection here. And we know that that's an area that price is moving off of. And then this is more parallel to this with these 2 significant touches as well on the wick. That's what we're seeing right now, this larger flag correction. Sorry about that. And then we can also put this on as well. We're going to start with the 2 significant touches at the bottom, because that's what's creating the slope. And then we can see the more parallel 2 significant touches as well. Right here. And so at this point, looking at 2 different types of opportunities for setups, because we see this inside this ascending correction, we see impulse, correction, which is ultimately the middle section, impulse. You could see it break lower, as we were seeing, double top, push lower, possible hover, and a push out, right? Ultimately looking for this area for buying opportunities. That would be a good area for buying opportunities with the higher time frame momentum to pointing to the upside. We have this larger impulse flag correction with the ascending as the beginning of it, right? This ascending channel is the beginning of it. Impulse down, middle section, break lower, double bottom within it, break higher. Could see that as a possibility. Could also see it continue lower. Look for this area. Sorry, 1 second. Look for this area right here as another possibility to push higher if that's what Praise wants to do. That'd be a good place to look for, setups that fit my plans, fit my plan. You could also see at this point, price kind of just hover along. One more of this correction and then push out higher. Also another possibility that could fit my rules as we're getting the higher time frame momentum to point to the upside. Or we could push lower out of this pattern. First tight correction, push lower again, correct possibly, before ultimately pushing all the way out, hovering along this trend line, and pushing out, completely flipping our bias back to that other prediction we had of possibly getting another double bottom here at the 1080. But those are some possibilities looking at right now for the euro. At this moment, the bias is more to the upside, looking for opportunities to the upside. But again, staying open to whatever the market wants to present me, whatever the market wants to do, that's perfectly fine. As long as the setup fits my plan, I'll be looking to see if it's a good opportunity. I'm looking if it's an opportunity that fits my plan and fits my edge in a way for me to allow my edge to just play itself out, right? Because that's the most important thing, to give our edge, to give things that fit our plan opportunity and enough sample size to play out and give you those consistent results that you have shown with the back testing, right? So this has been another analysis, a bit more long-winded, but I just got back, so I wanted to do a bit of a longer one and a quick little trade recap in there as well. So hope you enjoyed it. Just trying again to document my journey in any way possible. But again, if I can document my journey and also provide some value to somebody out there, that's just a bonus, icing on the cake. Hope you enjoyed it. Please join us for the next one, right? Going to be doing this way more often as at the Trader's Corner, something that we want to get into way more in 2020 and beyond. So be on the lookout for it. If you enjoyed it, like, subscribe. If you're feeling really generous, share it with a friend. You know what I'm saying? You can also follow us on Instagram at traders.corner. But with that, have a good one. Have a good week in the markets. And I hope everybody has a prosperous 2020. Go after all your goals.